Hi, good day. We have come to another update on the 8th of December. And I would like to share with you what I think is going to happen to the market. So here goes. Hope everyone's well. Right. So you look at the S&P 500, right? It is now on an all-time high. Who knows, right? The world will not end, as I said previously. So I think it's already, this is the weekly chart, is already overstretched the 50-week moving average. I think it will continue to run till the end of the year. We're going to have a nice Christmas rally. And then because of the incredible rise in the markets, I think there'll be a correction in next year. We don't know. Okay, I'm just extrapolating what's going to happen. And we must assume that if it goes up, it will continue to go up. And stock markets exhibit an autocorrelation tendency, but it will come back down and it will usually pull back to the 50-week or the 50 days or 150 days moving average. Now, this is the chart for Europe. You see across the most major markets is already broken to a new high. Europe is a laggard, obviously. I think the money printing, monetary policy, and stimulus is a bit more lagging in Europe. Asia ex Japan, new high. Amazing, right? I hasten to add before that Asia has problems printing money because a lot of the countries are issuing US dollar debt, denominated debt, and they can't issue local currency debt for the sake of lower interest rates. And because of that, they need to keep their local currencies stable against the US dollar. Otherwise, they will default just like the Asian crisis. This is one of the biggest bugbears, and I worry for Asian countries. But I think the saving grace was we have been really strict, and there is a lot of people are just wearing masks and they're under lockdown. And we, especially in east of Asia, China, Singapore, Taiwan, Japan, I think we have kept our death rates, infection rates pretty stable or quite low. In fact, we have no infections in Singapore for a while. So kudos to the government for doing this. I think lockdown has been really strict, and now they've been out. We are restricted to 5 people per table in restaurants, and then we have to close the bars by 10:30. But some restaurants do open past that time, but we have to wear masks unless we are eating. So I think that's great. So new highs, I think, because most of Asia control the virus very well compared to the West. Emerging markets, surprisingly, as well. I don't think Brazil or Russia have controlled the virus very well, but here you go. This region where there is hardly any money printing and stimulus, very limited stimulus, and yet it's all-time high. I think because also the valuations have been very cheap, and so money is pouring out of the Western world into Asia, emerging market flowing in. These are all speculative money from the West, and it will all go back once there's a correction. So emerging market in Asia tends to be more volatile, but it is a new all-time high. In fact, they outperformed the S&P 500. Now, China A shares. China brought the virus under control the fastest. They were the first to get hit, and look at the rally of the China A shares. And I think, again, most markets are synchronized, and China will increasingly be more synchronized with the QFII license and foreign investors going to A shares. I think, again, there will be a correction in next year, early next year, first quarter, maybe January, February. So it is time to pull back your beta. If your leverage, try to cut down to 0.9 times beta. That means you should either cut your leverage down and hold 10% cash or 20% cash at this moment. Now, bull bear sentiments is now at the neutral level. I think most investors, hedge funds are the smarter guys, so they are now on the bullish level. Credits, equity markets, I think most of equity markets are neutral. Bond flows are extremely bullish. So we are still neutral. There's way to go in. I think some indicators are showing that actually the professionals are bullish at the moment, which worries me. But this bull bear indicator is from Bank of America is neutral. Now, there's been, gold has gone up 18.5%, global equities 12. That's year to date. You have Investment grade bonds up 8.4, government bonds 7.5, high yield 5.1. Now, investment grade outperform high yield because I think government support has come on for the investment grade companies, not the high yield ones. Cash almost zero, 0.5. US dollar has dropped because of risk on. Oil has dropped 27.5% year to date, but is making a very strong rebound. Record inflows into equities, record inflow into EM debt and equity as well. Second largest inflow ever to value stocks. Finally, value is going to have its play after the vaccine has been announced. Fourth largest inflow to small cap stocks. So the rest of markets are playing catch up. Gold saw its largest daily outflow, is working off technicals over extension and crowded positioning. So I think gold and silver, I'm still holding on to it. It's about 5% of your portfolio, okay? It's just for a hedge. Its correlation is not very high to the equity market, probably 0.5 to 0.6. Now, buybacks on the left-hand side, corporate debt issuance is incredibly high, okay? But share buybacks have fallen a lot. Now, on the right-hand side, you can see that, again, the buybacks have fallen, collapsed, the light blue line, and you see that CAPEX has also collapsed, the dark blue line. So what I'm trying to tell you is that a lot of companies are holding on a lot of cash on debt, borrowing cheap debt from the government, whether it's assistance or whatever, is holding on to a lot of cash, okay, waiting for opportunities. And some of this money may actually flow into equities. So just bear in mind, there's a lot of support out there. So I think the rally will continue for many years, 2 to 3 years, but there will be correction. It's not going to be a straight line. So opportunities, you saw Alibaba, right, with the fiasco of the Ant Financials IPO being pulled off, and a lot of money was flowing into Ant Financials, and because of that, the fiasco, I think recently we had JD Health IPO about 35% premium, flowing to a lot of other IPOs as well, all of this Ant Financials. So I think that Alibaba is a buy. Of course, there's a lot of regulations that will continue to step into for tech in China, but they will be re-rated downwards. But the fair value is still 296, and last close is 264. I have been selling puts on BABA and buying calls. Okay, calls of 2023 January and selling puts of January 1, 2021. Now, Alibaba is testing the 150-day moving average, fantastic opportunity to enter. Another one is Salesforce CRM. Fair value 253, 227 is the last close. Okay, company has been is into this customer relationship management software, and you can see that again the trend is testing the 150-day moving average and is also resting on it, and the 150 days is also rising. So there you have it. This is my update, short and sharp. I hope you enjoyed it. Camera of my laptop is horrendous, but I'll get better cameras anyway. So hang on tight. There will be pullbacks, but the world won't end. So keep 20% cash, lower your leverage quite a bit. I've been busy taking some profits, but I'm still active in the market looking for opportunities. So I'm just sharing what I'm doing. If you like my video, please give me a thumbs up, subscribe to my video. It helps a lot. I'm not making money out of it. I just want to share my experiences so that you will, along the way, learn, and hopefully you get good things out of it and get financial freedom out of investing in stocks. Take care.